Quite the time to be invested in cryptos, Dash being no exception. However, it does seem like we're in a bit of a breather right now, but I see no reason not to remain optimistic, as this looks like a pretty healthy sideways fourth wave consolidation. Dash is not the only crypto taking a breather, as we're seeing the same thing across pretty much the entire crypto space, as well as equities. If you've been paying attention to the markets, the S&P 500, the Dow have been down, what, 2 days in a row, something like that. So there is that palpable sense of panic in the air, but I have no reason to think that we're going to turn that anytime soon. Doesn't mean we're out of the woods, but here's what we got in the short term. This is the 30-minute linear chart, and you can see how this pattern has completely outrun my previous analysis. These orange labels no longer apply, so I'm actually going to reconfigure this. This actually fits better as a third wave, with our current consolidation possibly being some kind of fourth wave, and we have a fifth wave higher to go. So going back to our low on February 23rd, we have a clear 5-wave pattern up and a very deep retrace, which, as you'll see later, it's not uncommon for Dash to have a pretty deep wave to retraces. And then presumably we had a nested wave one. I'm actually going to get rid of those drawings real quick. So you have your first wave, second, and then you had a nested first wave, and then lower degree third. Maybe that was the top of the bigger third. Whatever it was, it looks like we finally run out of momentum somewhat, which is a good thing. Again, we need to see need to have a rest, and fourth waves are part of the 5-wave impulsive pattern, so you don't want to go too far without seeing one. And we've been going sideways, so it's got all the characteristics: very choppy, very sideways, a lot of whipsaw. It's just ugly. That's what fourth waves look like. So if this holds, expect a fifth wave to come. How high will it go? It's tough to tell from here. I could actually run a fib projection based on the third wave top we have here. So if we have this as our third wave top, and presumably that is our bottom of the fourth wave, maybe we'll go a little bit lower. I don't know. Just leave it about there. Figured this will go to about $145 to $160, somewhere within that range to finish it off. If it keeps going and blast past that, that's fine too. There's nothing wrong with that. But you would ideally like to see some kind of a larger degree wave to retrace that's corrective in a zigzag pattern before we take off, before we bounce off the trampoline. Now, this is interesting because I now have an alternate pattern on the bigger structure. So when we shift to our long-term chart, it's the log chart. A lot of little changes I've made to make things more clear. This chart is available in the description below, so please feel free to check out that link. But I actually have added an alternate pattern to this, which we'll go over momentarily. But in the short term, or in the near term, it does look like we have a bottom in place. You can see the MACD, the MACD, how there's a very clear divergence in place. As we drop lower and lower, we've gotten less stretch at the downside. When I zoom up a little bit, I think I mentioned this in the last update, last analysis, we have almost a textbook perfect ABC correction for our wave two. We had a 3-wave A wave, a 3-wave B wave bounce, and then our final C wave down had almost perfect proportions for an impulse. You can see clear 1, 2, 3, 4, 5 wave pattern down. It hit all the fibs exactly as it needed to. You could argue it actually had a bit of a truncated finish, but point is, it's done. We have all the divergences in place to convince us that we're good, and we're seeing exactly what we need to convince us that there's good times ahead for the price action in Dash. So as I was mentioning, there's a couple of alternate patterns. Our primary pattern before used to be the green pattern, which I've now relegated to as being an alt pattern. And this is very similar to what you see in Bitcoin, Ethereum, as well as a couple other coins. I believe Bitcoin Cash, or was it actually it was part of EOS, in which instead of an impulsive finish, I'm expecting an ending diagonal finish. Doesn't mean we can't have an impulse, but a lot of reasons why I think that. So I'm going to go over the alt pattern first, because this should be most familiar. That would call for a conventional impulsive fifth wave. So what that means is that we'd expect a 5-wave pattern that hits our standard Fibonacci levels with appropriate pullbacks. And again, a very clear 5-wave pattern. And each of the subwaves up should also break down into 5-wave patterns. So that would tell us that, well, that would look for us getting to about 211 to 393 for our first subwave. Nice deep second wave. And then our third wave would go all up into the screen box here, somewhere between 29.16 and 54.16. Those numbers are crazy, I know. And that's part of why I'm not fully convinced that this green pattern is primary. But if we got up there in impulsive fashion, we'd be looking for a relatively long, slow fourth wave consolidation before a final fifth wave that would take us past $7,900, possibly as high as $14,700. So those numbers are absurd. But just like with Bitcoin and Ethereum, I have reason to be hesitant. Doesn't mean that I think we're going to crash or that something bad is going to happen, but I do feel like the ending diagonal scenario makes a lot more sense in this picture. And the reason for that, I'm going to go over by zooming out a little. So this is the weekly chart, and it's the only way I can show you the entire structure of Dash. Dash has a lot of history because it's been around. It's one of the older cryptos, and therefore, on my risk reward scores, this is actually one of the safer cryptos to invest in because it has a very robust pattern, clear 1, 2, 3, 4 with a fifth wave to come. Very robust. It hit all the fibs almost perfectly. The only exception would be that our fourth wave is arguably a little bit deeper than standard. We shouldn't have broken lower than $82 way back in 2020. But other than that, it looks pretty clean. Now, when we have this 1, 2, when we take our fib extension tool, we hit a little beyond the standard 1.61 extension. So a little bit beyond your standard upper target for third wave. That also means that we could possibly hit anywhere from 2,300 or to 6,300 as our ultimate top. Because we crossed a little above the 1.61 extension, I would lean more towards the 2.0 extension. So that gives our green pattern a bit more credibility. However, there's a chance that we don't go too much further past $2,200, $2,300. So for that reason, and because of the depth of the retraces, because we've had a very deep retrace for our first wave, which I believe was just about the 76.4% retrace. Actually, yeah, almost pretty deep. Those are all clues that this might be an ending diagonal. The final clue is that when you look at the structure of our rally off the March 2020 low, it doesn't look like a clear 5-wave rally. It can be interpreted as either. So look at this as a 1, 2, 3, 4, and a 5. It does fit all the proportions fine, but the shape has that boomerangy look. I know I was going over this in our EOS chart and Bitcoin Cash and a couple others. You can easily take this as an A, B, and a C wave to finish it off. So that plus the deep retrace, all those are possible indications that we actually have an ending diagonal on our hands, and therefore the purple is my primary. The difference between a diagonal pattern and an impulsive pattern is that you don't project as high and you have very sharp retraces as you go into your rally. So therefore, I would expect us to have 3-wave rallies to hit our targets. So this would be the third wave, the third subwave, and if we get, I actually just realized my nomenclature is a little bit up. That should actually look more like this probably. I'll get that straightened out before I publish the video. But if that's our first, that is about where our third wave would project. It would project between the 1.0 and 1.236 extensions. That's what this purple box represents. And you would expect to see a sharp A wave up, possibly a very deep B wave and a C wave. I am basically modeling this off the fractal that we saw back here. So off the 2020 bottom, if that's the A and that's the B, we had a 38.2% retrace. And then our C wave went all the way to the 1.764 extension, which is quite high for a C wave. Based on that logic, if we recreate that here, that's what this Fibonacci extension tool says for us. It would look something like this. Our A wave would probably still target the same box, but there's a good chance that the structure would not look like a 5-wave impulse. As a matter of fact, that could also break down fractally and recursively into its own ABC. So maybe this is we're getting near the top of the smaller A wave, sharp B wave, and then we have a C wave into that box. It's scary because you could also interpret this as a fake out bull trap kind of rally. Maybe it's like a bounce, B wave bounce with the further low to come. However, this is what diagonals look like. You have a lot of ugly 3-wave patterns. The only definitive answer you'll get is once you hit a C wave, the C wave should break down into your more conventional and expected impulsive 5-wave pattern. And impulsive because, well, we're in a bull market. I wouldn't expect this to look like a diagonal itself. So we'd look for something like this to finish the rally. And that would, again, take us somewhere between the 1070 and 1988 mark. Pretty good rally from there. But here's where things would change. We'd expect a very sharp 4th wave retrace, and that could take us quite far down. Diagonals often stick within trend channel lines or trend channels, which is what these purple dotted lines are showing us. Dash lines, actually. So expect a pretty deep retrace. Probably a good time to take some profit if you are investing long-term or whatever. And then we expect a final explosive rally for a 5th wave, possibly with a throwover, so well past the channel trend lines. And that would presumably take us as far up as $7,900. So pretty good potential, but that would be a very dangerous place to be because right after an ending diagonal, you typically have a colossal reversal to finish off the structure. So expect a cliff dive at that point. Along with being able to give us these targets, we can also kind of infer what the timeline may look like. And these channel trend lines where they intersect the Fibonacci levels, this is crossing right at about April 2023. The 1.236 extension crosses at about, let's see, probably well into 2024. I don't fully trust this because, again, this is a very rudimentary tool. You can predict the top of the 5th wave much better once you have your 3 and your 4 in place. And in addition, sometimes, and oftentimes actually, the third wave will pierce through the top of the trend channel line. So do not be surprised if we see action much sooner and much more quickly, especially after we get this initial A and B off the bottom. The C wave could be parabolic. That's what we've seen here as well in 2021. Absolute rocket launch. The same thing applies to a lot of the other altcoins such as ETC, Ethereum Classic, Bitcoin Cash, EOS, Stellar Lumens. We expect all of them to possibly behave like this. I do keep mentioning that Dash is my main indicator of sentiment for the altcoin space because it seems to behave and it seems to act more quickly. You see the inflection points materialize more quickly. We saw how the bottom formed very quickly, textbook standard. And this was the coin that maintained a 5-wave impulse up despite all the noise and chaos all around. There are a lot of other cryptos that didn't. Bitcoin and Ethereum certainly didn't, but this thing had 5 up. And then when everything crashed and validated their 5-wave impulses here, this maintained that 5-wave impulse. That's right. This blue 5-wave impulse never invalidated. So therefore, where Dash goes, the rest of the altcoins go. Even if you don't care about Dash, you think it's archaic, cryptic, whatever, good thing to follow. You should be cheering for it because if Dash goes up, very good chance other cryptos will go up as well. The final thing I'll let you guys know is that you will have another buying opportunity. So if that B wave dip happens, that may be your final one before we tear straight up. And if you fall in love with one coin, fall in love with a bunch, altcoins are high risk, high reward plays. So share the wealth, spread it out. Don't just have one. Don't put all your life savings on 1 or 2 cryptos. Buy a bunch. The only exception being Bitcoin and Ethereum, just because they are a bit more robust, bigger cryptos. That's where I'll leave it. Gonna have a lot more updates on not just Dash, but other altcoins. I'm going to be starting to reveal some stuff on other spaces as well, such as the DAO, metals, and there will be plenty of Elliott Wave education coming your way. So stay tuned. If you've enjoyed my video, don't forget to give me a like. Until next time, thank you for watching and happy trading.